The tech trade, the AI trade, it seems to have been reignited. That Apple upgrade, as Kramer mentioned, a bit unexpected. The upgrade was on the prospects for the new Vision Pro headset. We're going to talk about that later in the show. And also AI in general. What's your view of the Mag 7? What's your view of this AI trade?
Yeah, it continues to powering tech, Frank. You know, these companies have such a great growth profile, EPS growth. There's actually not much that can stop that, whether that's interest rates or the election. I think it doesn't matter. I think people are really buying into the AI trade, and I think it's going to continue to perform.
All right, so you're into the AI trade, but you're kind of like meh on the markets. Your S&P price target is 5,000-ish. Yeah. You don't see that much growth in the market this year. Give us a sense. If tech is great, the AI trade is great, what do you see in the rest of the market?
Well, there's going to be some challenges, I think, if you think of consumer discretionary or you think of industrials or materials. Very sluggish price action there. We have an economy that has slowed down, probably going to slow down a bit further from here. And as much as the Fed may lower rates at some point, I think that the tech trade itself is sort of on its own. It could carry the index to that 5,000-ish level, but it's not like a major bull market, say, Yardeni 6,000 or something like that.
You know, speaking of bulls, you guys do a lot of work with Tom Lee and Fundstrat. He's one of the more bullish people. How do you guys work together and you come with such a different one? We'll talk about that another time. I also want to talk to you about the bond situation, yields. Yields seem to be moving higher. At the same time, the market is expecting 6 cuts. The Fed's guiding to 3. How important are bond yields going to be the story to the market?
It will be because, you know, if the Fed ultimately is going to lower rates, it's not going to lower it once, it's going to lower several times. So the yield story is important. It's about the economy this year. It's about trying to get inflation under control, which looks like it. But the market had overextended with those rate cuts. So the Fed's not going to start in March. It's going to be later this year. It depends on inflation.
All right, so you're also looking outside the U.S. for opportunities. Obviously, we're a global show. The market you're looking at is actually India. You're looking at the growth prospects for India, especially compared to China. You're seeing a lot more growth there. We're going to show the audience some ETFs, some ways they can play that Indian trade. What is getting you so excited about India right now?
So if you take Indian economy, it's actually a lot like the U.S. economy, very domestic-driven, current account deficit, but it's really a technology country. You know, they've made huge investments. That technology sector expanded about $250 billion a year. A lot of foreign direct inflow into India, which has not the barriers that China typically puts on foreign investment. And so it's an economy that's now growing at 6.5%. Interest rates are at 6.5%, but inflation has really declined there. So it's a really good environment with high productivity. So technology-driven, if you actually look at the Nifty 50, the main index, looks just like the NASDAQ. So I think a really interesting opportunity.
So would you play the broader Indian market, or would you focus more on Indian tech stocks?
Well, there's 2 ways, indeed. You can do the broader index, which these ETFs show. If you want to play tech, you have to look at individual big names like HCL, I believe, and Infosys. They're like ADRs listed here. Those are companies that are like our tech companies, growing really fast. I think that's another way to play it.